Hello everyone, welcome to a new video. Today I will be analyzing the company of CARILOHA, which if everything goes as planned, it should be going public this upcoming Thursday, February 10th, 2022 in the NASDAQ under the ticker symbol ALOHA, so A-L-O-H-A. As always, my aim with these videos is to analyze the most relevant aspects in my opinion based on their SEC filing, which is publicly available, and if you want to check it out, it will be just linked down below in the description. And afterwards, if you find the video interesting, the company and so on, you can go ahead and you should go always ahead and do your own due diligence on that. Nevertheless, before I move into the whole analysis, let me quickly give you a short overview of the main topics that I will be covering today. First, I will start with a general introduction to the company. We will also look at some general metrics. Then we will go into the industry and competitors very quickly, followed as always by the financials, and we will compare these financials with two other competitors of CARILOHA, which are Purple Innovation and Sleep Number, followed as always by the IPO price and valuation, and we will again compare this valuation to the two competitors I just mentioned now. And finally, as always, I will be giving my personal opinion on the company and my future plans with it. With that said though, and after I remind you that if you enjoyed the video, really it would be super awesome if you could just give it a like, and please also consider subscribing if you want to see more IPO related videos also in the future. But with that said, let's go for it. CARILOHA is a company that was founded in 2007 and it sells bedding, so sheets, mattresses, pillows, clothing and bath goods, which are made out of bamboo-based materials, which are much more sustainable and environmentally friendly than most traditional fabrics. And in fact, according to research from Green Story Comparative Life Cycle Impact Assessment of CARILOHA, its products generate 28% less greenhouse emissions, 48% less water consumption, and 64% less energy usage compared to conventional fabrics, which as you can see in the graph in the screen, this is compared mostly to cotton. On the different categories of products that they sell, first starting with bedding, they have 184 stock keeping units, from now onwards in this video SKUs, priced between $25 to $2,900, and last year 67.5% of the total revenues came from this source. Then on apparel, so shirts, socks, underwear and these kind of things, they have 6,959 SKUs, priced between $10 to $89 each, and 18.1% of the total revenue was coming from this source. Then next is bath, so towels, bed sheets, robes and these kind of things, with 39 SKUs, priced between $24 to $120 each, which represented 6.4% of the total revenues. And finally, there is license and other revenues of things like design and build out services, which represented 8.1% of total revenues. Moving to the distribution of these products, they mostly sell them through the e-commerce channels, so mostly their website, but also third-party websites like for instance Amazon. And then they also sell through wholesale, and the final one is that they have showrooms in which they also sell their items. In total, they have 64 showrooms, and their strategy is to focus mostly on cruise line destinations, which these are located in Hawaii or the Caribbean islands. And out of all of them, 29 are located in cruise port destinations, as we said, and the rest just in retail ones. And just so you get a picture of how relevant these showrooms represent or are for the business, in 2019 they generated $23.3 million in revenue, which was 35% of the total revenues they generated in that year, so a pretty big chunk. And obviously during the past 2 years these revenues have decreased a lot, but that has been because of course the traffic of cruises going to the different showrooms, especially within these island destinations, has decreased massively. But the good news is that in December of this past year, 2021, the levels were already at 67% out of what they had in 2019. So we are slowly getting there. It's still not there, but their estimations are that during the second half of this year, 2022, the levels of at least cruises, passengers and so on should already be going back to the 2019 levels. Now it's time to talk about the industry, and on that I will use just the bedding one because it's where most of its revenues are coming from. And on that one we have that it is expected to grow between 2021 and 2028 at a compound annual growth rate of 9% according to Grand View Research. The industry itself is expected to grow, so that's super nice, but it is also very highly competitive, and they have many other different competitors, including companies like American Textile Company, West Point, Hollander, Casper Sleep, Purple Innovation, or Sleep Number, amongst many others. And for the comparison later on with the financials and the valuation and so on, I have selected Purple Innovation and Sleep Number, as I mentioned at the beginning, because both of these are also selling lots of bedding products. They don't offer bamboo-based bedding products, but for the rest, it's pretty much the same. On financials, I will start first with the income statement, and more concretely with the revenues, which we see that they decreased 30% between 2019 and 2020, mostly driven, of course, by the pandemic. And then this year, 2021, I have made the estimation, assuming that the growth of 1.21% that they currently have over the first 9 months of the year versus the 9 months of the previous one stays the same, also with the numbers of the Q4 2021, which we still don't have. And as we saw earlier on, they rely a lot on the revenues from these showrooms. They represented 35% in 2019, and it's not just the revenues that they generate directly with the showrooms, but of course they are also great sales and marketing tools, because lots of people go through these and they get exposed to the CARILOHA's products. So maybe there might be potential clients who don't buy anything in the showrooms, but maybe then they go back from their vacations and they are home and they say, oh, maybe let's try buying a mattress or something from CARILOHA. So I think that this has very negatively impacted CARILOHA, and hopefully in the next months to come, this starts getting better. Looking at other metrics related to revenues, we also see that the average order value, AOV, has been increasing consistently over the past years and is currently standing at $181, at least it was for 2020. This, though, they have already mentioned that it's likely that it goes down a bit, because as the showrooms start generating more revenue, usually the type of purchases that customers make there are of a lower size than when they do so through their e-commerce platform. So that's something to keep in mind for the future. And then on revenues per segment, it is clear that the e-commerce one is the one generating the most. And between this and last year, there hasn't been any major shift in percentages of the different distribution methods. So everything has stayed pretty similar. Let's see now when really cruise lines and everything starts going a bit more to normal. And also breaking it down by country, the US is the one generating the most. And we can also clearly see that the international revenues declined substantially between 2019 and 2020 because of what we already mentioned of cruise destinations, the pandemic, and so on. Moving to the bottom line, they were profitable before the pandemic, and actually this 2021, they seem to be getting back to it. For the estimation, I just took the profits they generated during the first 9 months and kept the same figure, assuming that during Q4 they won't extend this or lower this if they have losses during this quarter. Then looking at the balance sheet, we see that as of September 30th, 2021, they had a debt ratio of 76.65%, which is not that bad, but also not super conservative. As we will see though, after the IPO, the debt ratio will decrease substantially as they will raise a lot of cash. Now that we have seen the financials of CARILOHA, let's compare them to the two competitors from earlier on. And as you can see in the screen, both Purple Innovation and Sleep Number, besides being much larger, they have also grown at much faster rates, while CARILOHA even declined revenues. Additionally, at the moment, both of the competitors are profitable, while CARILOHA isn't, and also have higher net income margins. At this point, it's time to look at the IPO price and valuation. First of all, on the IPO price, at the moment of preparing this video, it is expected to range between $12 and $14 per share, and taking the midpoint of that, the company would raise net proceeds from this offering of $26 million, which is a lot, almost doubling the current assets that they have in the company. And something I didn't mention so far, but that I really like, is that the current CEO is also the founder of the company, and between the whole management team, they control 85.8% of the shares of the company, which is great as they keep control. And another thing that I really like about management is that they lowered their salaries during the past year. Of course, the company was not doing great, but it's good to see as well that they took the decision to lower their salaries. It was not by a lot, but everything helps. And I think that this shows a lot the commitment that management has with the company and to put it before their own interests. So that's great. And finally, On shares outstanding after the offering, they are expecting to have 12.3 million, but actually there are lots of shares that are excluded from this, planned to be paid in terms of stock-based compensation and so on. So I have included those also in my own calculations to make it more accurate, because if anyways in like 1 year time they are going to issue more shares and dilute the shareholders, then it's already good to put it into our calculations now. And if we do this, we see that they have in total shares outstanding, including also all those ones that I just mentioned, 14.1 million. Taking the midpoint of the range, the shares outstanding after the offering, and the revenues and profits that they did during the past years, we have that the company should start trading at a price to sales ratio of around 3.76 times and a P ratio based on the estimation for this year 2022-21 that I did of 630. The market cap would be of 183 million at the midpoint of the range, so a very small cap company. And just looking at this, it is already expensive, but let's compare it with Purple Innovation and Sleep Number. Looking at both of these on a price to sales ratio for 2020, we see that CARILOHA is still much more expensive despite having had negative growth, growing much less than the other two. And then on a PE basis, and for CARILOHA I took just 2021 because in 2020 they reported losses, it is the same story, trading also extremely expensive. After all the analysis, what are my thoughts on CARILOHA and will I be investing in its IPO? Personally, my answer is super clear and it's no. Not only I'm not an expert in this segment and I would have to do more due diligence, but in terms of valuation, I see it being extremely expensive, and especially based on their growth rates that they have had or even the potential ones that they might have, and also comparing it to the competitors, I mean, I think that it's a bit disproportionate. The good thing that I see about the company is that it's still very small, so the revenues that they are reporting are super small, and if they ever reach the size of some of the competitors we were just comparing it to, so for instance Purple Innovation, then this would mean a 10x in terms of revenues from where they are at the moment, which would be of course a lot. But I see zero signs of this happening anytime soon, and first they still need to get to 2019 levels in terms of revenues. So if I ever wanted to invest in this company, I would still leave some time to see how it evolves as cruises start taking more passengers and so on to the showrooms. And for now, I don't see this happening anytime soon. And then the other positive thing though that I see is that management is very committed, which is something that they have proved by lowering their salaries, which is also something I liked. Anyways, please remember that everything I share in this video is just based on my opinion, my research, and my calculations, which of course all of these could be wrong. I take absolutely no responsibility, and you should always do your own due diligence whenever investing in this or any stock. With that said though, what are your thoughts on CARILOHA? Will you be investing in its IPO? Please let me know in the comments below. If you enjoyed the video, then don't forget to give it a like, subscribe to the channel if you're not yet subscribed, and as always, see you next time.